Hey Sam, good morning. Good morning. A very low probability trading environment here in the market right now. SPY down for the day, 0.4%. Triple Qs down about 40.44, just about the same. And IWM also down about 0.5% right now. And all the indexes are approaching the 8 exponential moving average. 8 exponential moving average is going to be offering support for all three of these indexes today. The Qs are a little bit further away from it than the SPY and the IWM. SPY and the IWM are fairly close. And just watching the market just churn here. Only trade I took today was QURE. I took some November 17th $55 calls on this one. It's very speculative. I didn't post it. It's very speculative. The stock is pretty volatile, but I do like the setup on it on the daily chart. It's got some resistance up around 64.50. That's a long ago algo line. Terry, yeah, this is a good point. Terry said he's at a point in his trading now where he wants to scale up his trading size. In other words, he's been profitable now for a while, and he wants to scale up. Any suggestions on how to proceed? Well, obviously, to try to proceed on the times when you've got a decent trend in the market. Right now, we're in a choppy day. Take a day where the market's giving you some support, some tailwind, and increase your size slowly. If you're trading options, and let's say you're trading 10 contracts, don't go to 20 contracts, don't go to 30 contracts. Scale up to 12 to 15 contracts and do that for a while. And then after you feel comfortable with that, then scale up to 20 contracts. And I'm not talking about contracts, I'm talking about dollars. So if you're trading 1,000, don't go to 2,000. Go to 1,250, go to 1,500. Maybe increase by a half at the most. Don't double it or triple it. That's the inclination a lot of people have. What you don't realize, or maybe you do realize, is that when you increase your size, you're increasing your emotional attachment to the trade. You're getting emotion into the trade now because you're out of your comfort zone as far as the amount of money you've got to risk. As soon as you start risking more money than you're comfortable with, it's going to change the way you trade. Believe me, it changes the way you trade. So you need to scale up enough and get comfortable with it so that you're not freaked out of trades and dropping out of trades too quickly. And try to do it on a day when the market is giving us a trend that you can use. That's gonna give you a little bit of a tailwind, which is gonna help you with the likelihood of the trade being successful. Because the last thing you want to do is typically when you scale up, you take some losses. That's just normally the way it is, and a lot of it has to do with your trading mentality at that point. So scale up slowly. Try to pick a time when the market is trending in order to do that. Yeah, emotion attachment increases with size if that size is above what you're used to trading. If you're used to trading $5,000 a trade and you go up to 5,500 or 6,000, it's not going to change it much. If you jump up to 10,000, it's going to be a big deal. It's going to be a big deal. And your emotions in a trade is fear starts to set in. What you're doing is you're increasing your fear level on a trade when you've got more money in there than you normally do. All right, it just can't. Even if you're not watching your P&L, you know it's in there. It's going to change the way you think about the trade. So you've got to do this. You've got to do it for a while so that you get used to that level, and then you get used to the next level, and get used to the next level. Eventually, if you were trading to 1,000, 6 months later, you can be up to 3,000 a trade. You're completely comfortable with it. If you did that in 2 weeks, you would be not comfortable with it. You'd lose money. You'd end up going back to a smaller size and wonder what happened. It was trading mentality that caused it. Anthony, Gary, would I add to ABBV here? No, not right now. It's right back down to the 8. I'm not adding until I get a. First, I'm not going to add because I got plenty of options on this thing. But you don't want to add on a day like this. You want to wait till you get a bounce. Yesterday was okay here on the bounce up. That's where I would have added if I was thinking adding. Right now, I'd be waiting to see what it does. We don't know that this is going to work. We never know these trades are going to work. We're just watching it hold the 8 here, but it could go right back to the 15 and then bounce again. So this is not where you want to put the trade on. You want to make sure that it's confirmed above the 8. Philip, sound advice about scaling up. You probably need to repeat the advice daily. Saying it tongue in cheek. Believe me, this is wanting to scale up comes with in a couple of different situations. When you've been making money, like what Terry's asking me about now, he's been trading. I've been trading with him a long time, so he's been trading a long time. He's comfortable with his trading now. He's confident in his trades now. He feels good about the fact that he's making money on these trades. He's got a good win percentage. So he feels like this is time for me to start thinking about moving size up. So in other words, I can start to make more money based on the same strategies, which is exactly what you want to do. And that's the advice that I was giving. But the reason most people scale up is because what they're doing, what Terry's looking at right now, which is the proper way to do it. And when they've had a bunch of wins in a row and they made a lot of money, and they just made $2,000, and they say, man, if I had put double that in, I'd have made $4,000. If I had put triple in there, I'd have made $6,000. No, you won't. What you're going to do is you're going to lose the whole amount of money you just made trying to double up and making more money, because you're basically what you've done is you've inflated your ego because you had some wins. So now you feel confident about the next trade, next couple of trades. So you start doubling the size, tripling the size, thinking about how much money you could be making if you had doubled or tripled the size. And guess what happens? Down the tubes you go, because you're not thinking about how it's impacting your trading mentality. So don't be increasing your risk just because you've had a couple of good trades. It's funny, Ram Kumar. Ram Kumar says the sizing is easy. You just bet more money on the trades you're going to win. The old hindsight, just wonderful. Anthony, you did that before. And listen, everybody's done that before. Greed, listen, trading is fear and greed. I mean, those are the two emotions you're trading with, fear and greed. And those are the things is, if you're trading and you've got fear, and you're trading with fear or you're trading with greed, you're gonna kill your account. You've got to be trading with as little emotion as possible. So as soon as you start to put more greed or more fear into your trade, and a lot of times you're doing them both. When you jump into a lot more money into a trade because you've been winning a few trades in a row, you're starting with greed. But what happens is if it turns against you, now you realize you got more money in here than you had before, so your loss is going to be bigger. All of a sudden, the greed switches over to fear. But it doesn't matter. You're trading out of emotion both of those ways. You want to eliminate that as much as you can. Jarrett, you're looking to scale up too, but in the meantime, you're managing your risk in trading small, which is very smart until we get a trending market. We're in a trending market on a daily chart, but like on a day like today, we're in a bullish market, right? But this is not a bullish day today. This is a choppy day. So today's not a good day to be putting a lot of money into trades. Yes, as Shai points out, your risk should be size based on your account size, of course, and that should go without saying that you don't want to be putting 20% of your account size into one trade. You want to keep it as a relatively manageable one, and that's the only way. When you're talking about fear, how much of your account you got into a trade is directly related to how much fear you've got, and that's about taking too big a trades. It's the same thing. Yeah, Shai says, build your account up slowly, and that's what you have to do. This is you're in a long-term business here. When you're trading, you're looking for this long term. How much you make today or how much you make this week is not going to determine whether you're a successful trader or not. how much are you consistently profitable over the last 6 months? That's the difference, because that's got staying power. People tell me all the time how much money they made on this trade, or I made $5,000 this week. I'm ready to go now. No, you're not. 1 week does not make you a successful trader. Even 1 year doesn't make you a successful trader. You have to be doing this for staying power. I've seen people that were very successful for a year or so, and then they went to hell. I mean, they just fell apart. Their strategy didn't work anymore, and they couldn't adjust to it. They put in too much money. They get blown out of the water. It's a mental battle. This trading is a very mental battle. Sure. I said, yeah, it needs to be said. Yeah, I guess you don't put too much of your account size into a trade. I mean, it's obviously it's going to cause fear. Oracle's still near the high of the day. Yeah, the setup looks pretty good in Oracle to me. I'm not ready to jump into it on today, but the Oracle setup on the daily chart looks very nice. Looks very nice. I like the Oracle. Obviously I like QURE. I took this one. Freddie, you like that? It's a long-term business. Well, it is. If you're going to be a trader, it is a long-term business. What good is it if it's a short-term business and you're depending on the income for your living? It better be a long-term business. Otherwise, you'll be out looking for a job again. If you're doing this full time, I think that for most people, they're not going to be full-time traders, and they probably don't even want to be. They don't want to be. I mean, I'm almost obsessed with trading as far as watching charts and stuff are concerned. I love doing it. To me, this is not work. It's kind of like fun. This is fun for me. I mean, I love doing this stuff. I take losses, I take wins, but I consistently make money, week after week, month after month, year after year. And I mean, I've had losing months, but I've never had a losing year. And the thing is, most people really, they're just looking for a way to supplement their income, get some more disposable income. For a lot of traders, an extra $500 to $1,000 a month will make a big difference. It makes a big difference in your life. $2,000 to $3,000, $4,000 a month, all of a sudden it changes everything. The crush of worrying about bills and everything all the time. This is what can resolve that. But it's a business, and you have to be committed to it. You don't have to do this 8 hours a day like I do. And I spend more time than that. But when you are trading, you need to be committed to a methodology that works and strategies that are successful, and you've got to stick to those. It takes patience and discipline. You trade whatever time you want to, but the thing is, if you get this down, you can depend on it to bring in money month after month. But you've got to stick with it, and it's not easy. Ram Kumar, you learned scaling with Kelly criteria with blackjack. It's not directly translatable, because you see in blackjack, you've got a specific strategy that you're following, and the amount of money you're putting in is based upon what the actual percentage is likelihood of you being a winner. In other words, when the player has an advantage over the house, then you can bet larger money. Obviously, you don't want to bet your whole bankroll, but you're going to bet larger money. But it's all based on just the deck composition at that time. All right, and so when you're trading, it's nothing like that, because you don't really have something that's going to be swinging into your favor so much that you're likely to make huge bets on it. That doesn't happen in the market. Yeah, exactly. When blackjack, when you're trading like that, obviously, if you lose, you're losing 100% of the money you put up there at that point in time. That's not the case in trading. It shouldn't be. Most of the time, you're not going to lose 100%. Good point, Ram Kumar. Appreciate it. You mean after a dip? Yeah, that's fine, Jarek. Yeah, you mean after a dip for a trending trade? Yeah, the stock is bounced after. We took the SPY. Let's go back and we'll talk about this just briefly because this is a low probability trading environment. I'm not doing much trading, but we took the SPY long here on this bounce. See how this pulled back to the 15 and bounced? We went long. That's a Friday. We went long over the weekend on SPY calls. Took profits and then went long again because this kind of pattern, pulling down and then moving up, pulling down and then going up, pulling down and then going up. This has been repeated now for quite a few months. Here's a big pull down up above the 15, you go long. And it's easy to see in retrospect, but we spotted this not in retrospect. We spotted this right at the time. Anticipation was the pullback to the 8 and the 15 and a bounce right here told us that we were going to be long in going into the next week. And we took calls for the following Friday, not the call on the following Monday. So that's exactly what we did on this. And that's how we've been able to trade long. Right now we're waiting for a pullback again, and we're getting a little bit of a pullback, and we'll see where it goes. But this isn't a very deep pullback like this one here, on this one here. This is just a small pullback like on Tuesdays. Joe points out a good point from Joe in the Discord room. Every trade is a possibility of being a winner. Sure, especially if you're taking a high probability type trades. More exposure in a trend day is okay. Exactly. You can put more money at risk when the market's trending than you should on a day when it's not. And yeah, you do have to take that into an account. But obviously, I don't think you should be trading twice as much on a trending day as you do on a choppy day. Joe says his risk is 1%, but he has a large account. Well, yeah, and that's comfortable. If I had a small account, less than 25K, it would be a max of 2%. Yeah, and I don't try to throw these percentages out because it just it depends on your risk tolerance, etc., and your approach to money. But obviously, you don't want to put a lot of money into trades, not too much. Hey, Suzanne. Oh, great conversation. Thank you very much. I appreciate that. On a day like this, I don't want to be, I'd rather be distracting from the trading by talking about some things that I think are important than having people looking for trades to make. There isn't that much to trade right now. There just isn't. It's very difficult to do full-time, Shai. Very difficult to do full-time. Yeah, and that's Shai points out a good point. It's very difficult a lot of people go over to full-time trading and get clobbered. And what you don't understand is when you give up income from a job or whatever it is you're doing, and you got money coming in that you're using to pay your bills every month, etc. And you're trading and you're doing great trading. You say, well, I want to dump this job. Nobody wants. I don't think anybody want to work for anybody, willingly. But what I would say is that you don't when you switch from part-time trading, when you have work money coming in, and you try to go full-time, when you get depending on this money to live on. I don't think most people are prepared for what that does to your trading mentality. Because remember we talked about fear, right? Because you get too much money on a trade. Think of the fear that's now instilled on you when you have a couple of losers, when you're depending on that money to live on. It's magnified way more than it is under normal circumstances. And this is the thing that kills most people when they switch over to full-time trading. And I got thrown into it because I got laid off from my job, but I had been trading for a good long time. But I went full-time, and I guess I was lucky. I had a couple of really good months, and at that point in time, I told my boss I couldn't afford to come back to work from when they called me back to come back to work. So I was thrown into it. But I know a lot of people that tried to do this and did it willingly, and they basically get into it methodically. They had a specific win rate, like should be maintaining at least a 75% win rate. Um, and you should be able to have done this for, for me, you need to be able to be profitable month after month after month for at least a year or two before you should consider going full time. And you need to have money set aside to protect yourself. Because if you don't, the amount of fear that's going to be inside you, what the fear that you're going to have instilled in you based on the fact that you now need this money to live on, it's going to just mess up your trading. Because when you go down a little bit, let's say a week's coming up and you've got to pay a mortgage, and you're down on Wednesday and you're down a couple thousand on the week, and you got to have it by Friday, your whole trading mentality and your whole methodology and strategies completely blown out the window. You're making trades trying to make money based on the fact that you need money, not based on the fact that the strategy's set up to work for you. And it's a downward spiral that kills most people when they try to do it. And most people, I don't think, really should be doing it full time. I think they should be doing it to bring in additional income, but that's just my opinion. Yes, Shai, it's very hard. Blackjack, you would Ramkamai, you'd look for $400 to $500 max bets of bankroll. Yeah, I'm not going to get into a lot more blackjack today. I mean, blackjack is very difficult now because of the rule changes and the automatic shufflers and all that kind of stuff. Any profit target yet? I haven't even looked at Cure right this recently. I've got to take a look at it. If it goes up enough today, I'll take profits on a Ramkamar. The best conversation is happening during LPTE. Yeah, well, it's that's obvious because we've got. I'm not looking to trade right now, and I guess getting off on tangents keeps me from getting into trades. Is my Teams on, Ari? Yeah, oh, it is. Oh, you've been putting stuff out there. I've been kind of rambling. Ari's talking about blackjack. If you lose and show a sad face, the pit boss will give you a meal voucher. Yeah, keep you around. GRAL continues to look good. Thank you very much. Yeah, GRAL, it does really look nice. Again, Ari has some really nice biotech stocks. And he knows this business, he knows this industry, he knows this sector. That's a very nice move right there. And GRAL, AQST also popping. Yeah, I had IQ, and I took this last time you talked about this, and I made some money on it. I'm out of it now. Wish I wasn't. But yeah, AQST, nice move there in those two biotechs. Thanks, Ari. I got a little distracted on my tangents. QURE moving up pretty strongly here right now. It's right around the algo line, right close to my resistance level, but it's really coming through with some pretty big volume here. I got to watch this pretty closely because I'm probably up money on this thing. Let me see. QURE, yeah, I paid $11.20 for it. It's $12.35 right now, so I'm up about $1.15, $1.20 on this thing right now, a contract. I'm going to see what it does here today. Ripping up pretty nicely. I might just take it off and take the money. I mean, this is an LPTE day. This is the one I took off the daily setup. I'm getting a good move here. Did I know this was coming? Of course I didn't. I didn't know that. I expect this thing to move up, not necessarily today or tomorrow, but I'm getting a good move, and I'm getting a good move on volume. So I'm going to watch this volume, and this last candle right now is about 100,000 shares. Previous candle was about 77,000 shares. So the volume is increasing, and Cure is moving up. And I may take profits in it, and then let it pull back, and then come back into it again. Because again, stocks don't start running and just keep on going forever. And I am very close to the algo line right here. So even though I'm swinging this, I may take this off. I'm probably going to try to take some of it off at 1270. It's $150 a contract if it gets there, and then hold some. It's getting a little bit weak, so I may just pull this thing off because this is extended up quite a bit here right now. Still moving. And so I took partial profits in QURE at 1250. I took partial profits in QUE at 1250. Again, I hit this on a swing. I didn't really expect it to make a move like this today, but I did. I am going to take part of it off, right? And I did. I get in at. What did I get in at? Yeah, I get in at 1120. I just took part of it off at 1250. 1250. Shy Meta, nice move through the SMA, simple moving average. Meta's been a tough one here on the daily chart here. This is a little bit been tough to trade this Meta. This is a pretty ugly chart. This is really very ugly. See, we haven't see the range we're in here. This big, huge range of above here and down below here. This is a big one. We did pull back and put in a hammer here. That's usually a reversal, which we're getting. But we're above the 8, but we got the 15 here. We got a horizontal line here. We got the 50 up here. I just don't like this for a trade. Now for an intraday trade maybe, but I wouldn't take this long right now. It's just been way too wild. Again, I took half my cure off for profits. All right, so I'm out of the part of my QURE. I may take the whole thing off today. I don't know. We'll see what it does. It's up right now. It's trading at 1230, so Still up about $1.10. I took it off for $1.30 a contract. Half of it off again. I'm happy with the profits I took. This is a SPY. Trying to get up to the VWAP. Can't. This is very low probability trading environment here. Very, very low. All right. See if we have any questions over YouTube. Sorry. Got a few there. Sam, in August you exceeded your goals for 3 months straight. So in September I scaled up. Okay. September was a rough month. Yeah, September was a rough month. And when you're scaling up, you're talking about going multiple contracts. But that when you're scaling up here, Sam, you should be talking about the increase of how much money you're putting into the trade, not how many contracts, because the contracts depend upon what the option price is. September was your first losing month since March. And yet, a lot of times when you scale up, that's exactly what happens. Twilio looking strong today? Yeah, Twilio looks pretty good. It's back above the 100 and the 200-day moving average right now. It's in a gap. Let me put the gap on here. Gap off for earnings. Right there. Okay, so here's Twilio. Here's the earnings gap right here. It's trying to fill it. Here's your going to be resistance right up here. Right here at that level. Which is quite a bit higher. I mean, it's about 118, about $4 higher. But you're out above the above the 200 and the 100 right here, and this out in this horizontal support line. But if we take a look at the 8 is at $109 basically. So about $5 over the from there. Yeah, that's not too bad. Just about 1 ATR. That's tradable. Okay, yeah, nice look on that one. All right, see if we have any questions here after I rambled on for a while. Tried to scale up and it didn't go well. It doesn't usually. And you know, a lot of times you think, oh, I had bad luck. The trades went against me. But a lot of times it's the way you're trading that does it, because you just don't trade the same way when you have more risk on. That's why you've got to really ease into to increasing your size. Most people don't understand how much of an impact it has on their trading mentality. Michael, the good discussion. Good, I appreciate that. Most important, this mental one. Yeah, it is. The trading is a mental game. I mean, it's a mental game. You're trading against. Most traders are trading against themselves. I mean, that's what it boils down to. And you've got to have a really stringent set of criteria and strategies and methodologies that you stick to, and you've got to stick to them. Because as soon as you start to drift away from one for one reason or another, it can be really ugly. QURE still looking pretty good here. Again, I get out out of half my position now. about 12:20 right now. Hey Sam, you followed my advice yesterday on Amazon. You get out at the 50-day moving average. Yeah, it ran smack into it yesterday. This is what he's talking about. Yeah, we talked about this yesterday. He asked me. I said, if you're in, you took profit, you'd be taking profits, and when it gets to the 50-day, I'd be out, because it's it hasn't been through the 50 and stayed through the 50 at all. 50 is you can see how strong the 50 is for the support coming down. Comes down, bounces, come down, bounces, come down, bounces, come down, and then it fails. Now it comes down to the 100. Now we're fighting the 100, but the 50 is still sitting right there, which is going to be fairly strong resistance levels on Amazon, which it was. I'm glad it worked out for you, Sam. My advice isn't always good. All right. About 12:25. And I might peel off the rest of QURE and look for a pullback in it later. I might keep on going, but again, Market's not doing much of anything. This is a nice move in QURE today. It's up almost 8%. Um, it's not terribly extended. The 8's at $56, so it's up about $8 above the 8. But it has an ATR of about 6. But I may just, if this doesn't make another move up, I may, or if it does make another move up, either way, I may just pull this thing off. Macy's still trading below the 15 EMA, by the way. I'm watching that as well to buy back those puts. We'll see. I'm going to wait till toward the end of the day before I decide if I'm going to, because I don't want to take those puts off and then have it bounce up tomorrow, because then I'd have to put the puts back on again for next week, and I would have taken a little bit of a loss on the or a little smaller gain on the $17 puts that we've got. So I'm going to wait to closer to the end of the day to see what it does. I may wait right till tomorrow. The airlines have gapped up this morning. American Airlines this morning gapped up beautifully from yesterday, and it's getting smacked down really pretty hard right now. You can see where it went. This doesn't trade very up to 12.50 today. This is stock does not move much. It moves pennies, and it's down 90 cents, which is a lot for that stock. It only has an ATR of 40 cents. So big drop in that. It's coming off of the Delta's gap up on earnings this morning, and a big pullback now. Up to 62.27, right down now to 59. Very, very choppy here. The market's not much doing anything. You can see the colors down here on the momentum. They just keep flip-flopping around. And if I'm looking at the market internals, they're coming down, but they're drifting down. They come down, then they pop, come down and pop, come down and pop. Just drifting down. The market's coming back in again a little bit now. No pace or rhythm to the market at all today. Ari, did not close QURE completely yet, no. I'm thinking of it. I'll let you know if I do. And, I've got mixed feelings on it. I really like the setup, and I do have calls go all the way out to November. And I've taken some of them off for a nice profit. I mean, this stock could get to $80 pretty easily. So it's really, really, I'm looking back here to see what was the level of that breakdown. You've owned it for a long time, Ari. Yeah, it's a great stock. You've owned for a while. Yeah, it's a nice one. And this thing is pretty volatile. I mean, this if you go back here to where the big gap up came on QURE, right here, this was pretty dramatic. Look at the volume of this thing on this day. 60, almost 70 million shares, which it had been trading under 2 million as an average. The average was 1.2. So it traded 70 million. So obviously, big announcement here. But a lot of times when they get this far away from the 8, they pull back. But it didn't really pull back. It just moved up at a slower pace, and then it compressed. It moved right up with the 8, and then here it goes again. And so it's not extended from the 8 right now. So, I mean, this is really what's called this is a nice J hook pattern, or a PBO, we call it, a pullback opportunity. And I'm of a mixed mind as to whether I want to take my profits today or hold some of these. What I might do is take some profits and see if we get a pullback in it today, which I just took it off. Ari, I just took the rest of it off. Yeah, they reported great outstanding results, I know. Again, I took it off right here. I'm just trying to determine if and when I'm going to get back in again. I think I probably will, but I'm going to wait and see. It is, by the way, a doji sandwich right here and here and here. Right, so here's the candle on Tuesday from $50.80 to $58.66. So basically $8 on this candle. Right, then a doji, and today we've gone from 59 to 64. All right, so about $5. This is about 8. So there theoretically could be a little bit more space to the upside today on a doji sandwich, but I want to time it. And so I'm just going to watch and see what it does. If we get a pullback to the 15 or back to the VWAP and then a bounce, that's probably where I'll re-enter with the exact same calls out to November. Right, so I'm at a QURE right now. And then, in retrospect, it looks like a good exit. Doesn't mean it's going to stay down here, though. I'm out bouncing in, but I'm going to be looking for an opportunity to get back in again. But it's going to have to come back down, to 63 or so. Can I explain the logic of the QUREA trades, Z? All right, sure. Let's look at QURE. And I've looked at the daily chart on this thing. All right, so let's look at the daily chart. This is the 5-minute chart here. I don't even know what time I get into that trade. But at the time, I wasn't trying to time it. I was taking it as a potential swing trade. So this is QURE here. Right, so this was this big news that pushed this thing way up. Again, this is a biotech. These things don't trade with the market, right? They trade on their own. You can't take a look at these and say, okay, do they have relative strength against the SPY? It doesn't matter. They don't trade with the SPY. All right? They trade with biotechs, but they mostly trade on their own. Right? So what I'm looking at here was this move up, and I've been waiting to get into this thing. I was waiting for it to get off to do a PBO. See it pull back like this to the 8 because I love this setup. I mean, there's a lot of buying on this thing. So it comes back here, it comes to the 8. So I've been talking about getting in for a couple of days, but there was a couple of resistance levels that I saw day before yesterday and yesterday. But today I like the break. I like the break of this above yesterday's high, so that's where I took it. All right. This is still a really nice setup on the daily chart. You get this what's called a J hook. It comes down, it hooks, it does a PBO, hooks around, and starts to head back up again. And so I think and again, it's got earnings on November 4th, and you only have monthly, so you have to buy the November 21st calls if you take it, unless you just buy stock. But this is a setup I really like. I mean, I really like the setup. I took ABBV. I like this ABBV setup. Same thing, PBO, pullback, founding support on the 8 and the 15 right here. Today it's just up 53 cents in a down market and trying to hold on. Nice setup for a J-hook type move. QURE. Nice setup. These are, if you see the similarities here on these kind of trades. Both of them are very good, high probability setups. QURE is a little more volatile, so I have to be cautious with that one. Ram Kumar, Tesla bouncing off the VWAP. Okay, yeah, you know, Tesla, it's not just the bouncing off the VWAP today on the 5 minute, because we go to the 5 minutes, you're going to see it here. Is the VWAP right here? Came down below the VWAP, now it's moving above it. But the key thing for me is on the daily chart, it's holding the 15. That's important. I put it on back here. I got $1.15 a contract when when I entered the some more put credit spreads on Tesla. Then I took them off the next day for 50 cents. But when the time is coming where you're not going to be able to get a decent enough amount of credit to take a put credit spread on it because there's not enough time left. Joe mentioning the solars breaking out, run, CSIQ. Yeah, all the solars are working this morning really nicely. Here's run here. Sedge, we talked about these earlier. Sedge, beautiful move in Sedge. Solar's all moving nicely. But as far as Tesla is concerned, you know, my only concern with Tesla was that it stays above $400 by next Friday. And as we get closer and closer to the expiration date, we're going to get closer and closer to that 25 cents order we've got to buy back the remainder. We've already made 50% of the max on it, on the half that we've gotten, and now we're holding the other half, and holding that to get it off for 25 cents, which would be a really nice profit on the Tesla put credit spread. We made really nice money on the CoreWeave put credit spread that we had on right here. Oh, that's not the spread. The put credit spread. We got out of those things for 25 cents, and we get in for $1 to $1.10. That's a really nice trade. Credit spreads are really good trades. A lot of people think they're not great trades because the most you're going to make on them is 25 to 30% or so of your money. But you have to understand that there's way less risk in these than there are in taking straight calls, because the stock can move up, down, or even down a little bit, or sideways, and you still make money on them. And if as the time decay goes by, you just every day that the time goes by, it's putting money in your pocket, because you've got the credit when you put it on. When you put credit spread on, all that money goes into your account when you do the spread. Okay, if you collect $1, if you collect $100 a contract, it's in your account. Then you're going to have to buy it back at some point in time. And what you want to do is buy it back for as much less than what you collected. So if you can buy it back for $25, you make $75 on each contract that you pro. And again, people question me on doing credit spreads because you know, if you lose one, it can wipe out 3 or 4 trades. But the point is, they don't lose anywhere near as frequently as straight calls do, because you've got so much flexibility in them. As long as you stick to your setup criteria, multiple 2 to 3 at least levels of support need to be above the put that you sell. That's how we did Tesla. Because here's Tesla right here, the critics. But like when I put on this one, we put it on originally. We had all these high volume lines, but see, we were above the 8, we were above the 15, we're above the 50. We're at $400 on this thing, right? So $400 now is up right around here. You got all these horizontal levels that we were supporting us, as well as the 8 and the 15. That's why I say, as long as we hold this 15, we're in good shape on this thing. And I took it after it bounced back up above the 50, and I added, and then take them off the next day, because they were paying so much. But they're not going to, each one of these drops to the 15 is not going to bring in the kind of premium that you would have got last week, because there's not enough time left on the trade. SPY pulling back down again. Kind of a big tail on this candle though. Again, you got to be careful. I wouldn't be taking the SPY here. Just this hammer bar, this big tail. See, we did one here. This is just chop. Again, low probability trading environment here. It's about quarter of one. I'm going to get lunch here pretty soon. Going to get lunch pretty soon. I'll shut down the YouTube feed. I want to thank everybody from YouTube for being on here today. I appreciate it. Sam, thanks. Nice. Some good points you took. Stocks you pointed out with Twillo, and appreciate all your posts out there. Thanks very much. Appreciate it. So I'm going to go ahead and shut down YouTube. We'll be back again tomorrow, last day of the week, about 11:30. And hope you have a great afternoon. Good luck trading. Make some money, and we'll see you back here tomorrow. Again, take a look at joining my room at the spyrightlinetrading.com. Happy to have you in the room. On the alert service. And again, this software is I guess I just kind of assume that people know how good it is. This is a really outstanding piece of software, the SPY Super System. And if you're going to be a trader, I highly recommend that you get this. You buy it. You can get it for a lifetime with my room for about $2,500, I think. And then you have this forever to trade with. They'll load it on Thinkorswim for you, and it gives you a tremendous edge over other retail traders. So have a great evening or good afternoon, and we'll see you tomorrow. Thanks very much.